BlackRock's 10/17 date. So any decision before that date, I think is a negative decision. I'm not sure it'll be an outright denial, but will definitely be an extension and a push.
In today's video, Mark Yusko, the founder, CEO and CIO of Morgan Creek Capital Management, discussed about the Fed raising interest rates and impact on all markets including crypto, the crypto bear market, and if we've hit the bottom on Bitcoin.
Do you think that this October is when the SEC might actually give us an early Christmas present? Or do you think it's going to get pushed again?
No, look, I'm 50-50 at this point. So I do think more tricks than treats for anyone who's ahead of BlackRock's 10/17 date. So any decision before that date, I think is a negative decision. I'm not sure it'll be an outright denial, but will definitely be an extension and a push. And then we come to the big dog. I believe, and I've said multiple times, that BlackRock will be the first one. I've actually been saying that for over a year. I actually might even go stronger and say they'll be the only one approved. And be like, oh, that'll never happen. That would be too much, corruption. I'm like, well, I'm just saying that it's certainly possible. Mm-hmm. What's probably more likely is BlackRock first, and then a gap, and then some number of others. But the thing is, whoever's first is going to get the vast majority of assets. Vast majority. Yeah. So
first mover is always going to be taking. I mean, that's just like the gold ETF kind of was same kind of
gold
scenario.
ETF was an example with GLD. You had the Bitcoin futures ETF with BITO getting 98%, and then a couple others getting like 1% each. So that's just my belief, and I believe it's who you know in this game, not what you know. There are a lot of people who should have gotten approved, right? The Winklevoss twins were the first to apply. They should have gotten approved. There was no reason not to approve it, other than, again, kind of the way the game is played, and the people in charge want to be in charge. So any new disruptive players, I think, are unlikely. Kathy Wood partnered with one of our portfolio companies, Amun, to do 21 shares. That looked like a great application. Dinged, pushed out. I think Bitwise is a day ahead of iShares on 10/16. As much as I would love it, again, portfolio company, full disclosure, I would love for them to get approved. I just don't think it's going to happen. I don't think they'll be denied. I just think they'll be pushed. And here's why I'm 50-50, Paul, to answer the question, is I think they could approve on the 17th, but I don't think they will. I think they'll push it into next year. So you push 90 days, that gets you into January.
January 15th,
You could push again then into March, April, but that's it. Then you have to approve. Now, what's interesting is we have this little thing called the halving coming up in mid-April of 24. And so it would be an interesting alignment of stars. But I said, could they pull the trigger on BlackRock in a month? Yeah, they could.
Along with maybe a little bit of lightening the load in terms of inflation, because I feel like we're going to continue to see some inflation hits through the end of the year. What is your thought on how the inflation numbers came in this week and how the Fed might react?
I don't think the Fed cares about gasoline prices, quite honestly, Paul. All this little blip is gasoline prices, all of it, right? I think most of the other components were actually negative. And the gasoline prices are because Saudi has decided to go a different direction, right? We had a very hunky-dory relationship with Saudi from 1973 till now, and it's clearly over. right? I mean, the big guy went over to Saudi right before the election last year and tried to get them to pump more to get oil prices down and gasoline prices down, because, there's this inverse correlation between presidential popularity and gas prices. And they basically said pound sand. And so he came down, he came back and drained the SPR.
Yep.
Terrible strategic decision, but a politically expedient decision to get gasoline prices down. Guess what happened? Democrats did pretty well in the election, and because
there's no way out for that now, though. I mean, there's no way to get those reserves back out.
Now we have an empty SPR, and the thing is, we can't fill it up ourselves because, and again, not to get too technical, but there's light sweet crude, which we produce, and a number of other places, Nigeria and others produce, and then there's heavy sour crude, more sulfur content. Because we cut this deal with the Saudis in the 70s, we built all of our refining infrastructure around processing heavy sour.
Yeah.
Well, here's the problem. If now Saudi is going to sell their heavy sour to China and Russia and other places, and we're not going to get as much of it, what are we going to do? Well, we got to build new refineries or retrofit the refineries. Turns out no one wants a new refinery in their backyard.
Yeah.
I think I'm right. It's been like 30 years since we built a refinery. Turns out they spit out, pollutants and things like that. So nobody really wants one around. We all like driving cars, by the way, and living our lives. And we can stop using oil. No, we can't. Yeah. Everything you do every day, the vast majority of it is powered by oil and gas. The vast majority. And yeah, you say you could get an electric car, but where'd the steel in that car come from? Did they make it with electricity? No.
Yeah.
How about the plastics? No, oil. So it's kind of comical when I hear we're going to, outlaw fossil fuels. But back to the inflation number, I think this might not be temporary in the sense that Saudi announced they're going to do a voluntary cut. Why? Because they're just sticking the knife in a little bit deeper. Because they're like, all right, guys, you said you were going to refill the SPR. You didn't do it. Oil prices were all the way down in the 60s. Could have easily filled that thing back up.
Done it, for sure.
But now oil prices are in the 90s.
Yeah, we're going to hit $100 a barrel, for sure.
Yeah.
How does this, okay, so when you look at that, Mark, and you look at an election year coming in, you've got all this pressure from the macro side, including most likely jobs market getting a lot stiffer, companies starting to really get some pressure on them. We had bankruptcies at the highest point ever. We've had, a very long period of time for independent companies. This does not look like a rosy picture. Where do you think we come out of this in relationship to the timing of the halving, Bitcoin ETF, maybe into next summer? How far into 2024 do you think this happens?
So, I believe the ETF will be approved sometime around year end, whether it's in early January or December, sometime in that time frame. Okay. And I think that will pave the way for a very large influx of capital. I know you've had Eric on the show, Balchunas, and he does this great work, right? I mean, there's 30 trillion with a T, 30 trillion. Remember, 1 trillion is $1 every second for 31,710 years. But 30 trillion is going to come into, or that's the total amount of money managed by RIAs and others that is not allowed at this point, for whatever silly reason, to own Bitcoin. And they can't own GBTC and they can't own Bitcoin miners, and they've called a timeout. Well, once there's an ETF, particularly if it's an ETF that BlackRock runs, there's going to be no excuse, and they're all going to have to approve it. Their clients have been asking for it. I would say I have a family harmony account at UBS. They won't let me own anything related to, like, why? It's my money.
Right.
You let me buy what I want to buy. And they're like, no. So I think all that goes away. And I think Eric's number is, let's say 0.1% comes in. That's 30 billion. Well, but wait, 30 billion on 500 billion, that's not that much. Well, no, it's not 500 billion. 400 billion of the 500 billion of Bitcoin's market cap doesn't really trade. It's either
Exactly.
locked up like the Satoshi wallet or the Winklevoss wallet, or hodlers that just said, take it out of my cold dead hands. It's only about 100 billion that is the free float, to borrow a TradFi term. And so 30 billion on 100, that'll move the price.
Yeah, for sure.
I don't think it's going to be 10 basis points. I think it's 1%. I think you have to do 1%. As a fiduciary, if you got, 50% in equities at some of the highest valuations in history, and you got, another 30% in bonds, which have had the first 2 negative years in the history of the bond market, 140 years of history, 2 negative years, looking pretty ugly. And you got this asset that is the best performing asset again. Okay, 11 of the 14 years that Bitcoin has been alive, it's been the best performing asset of all assets. It's the best performing asset again this year.
Yeah, Eric hit on his prediction about 150 billion in terms of market impact. Do you feel so you like that number, or you think that?
Well, I think he's 150 billion would be 0.5%, right? Instead of 10 basis points. And it looks like he's updated his thoughts. I'll go further and say 1% seems more likely. That'd be 300 billion. 300 billion on 100 billion of free float, price goes up a lot. And here's the interesting thing, Paul, is the way halvings work is the fair value increases. So we've got a tailwind that the fair value today, based on Metcalfe's law model that Tim Peterson runs and that I think is fantastic, says that the fair value is somewhere in the low 50s, 52, 53, let's just call it 50. So at the halving, fair value doubles. What do you mean, Mark? What are you talking about? Well, think about it. The miners who secure the network, their costs are fixed, mining machines and electricity. So if their block rewards, the number of rewards that they're paid to secure the network, gets cut in half, and the price doesn't move, then they're out of business. So there's a built-in mechanism to move the price higher, which is actually really interesting because that attracts attention because there's movement. And so, long story short, fair value, every halving has added a 0. So we went from 100 to 1,000. Then we went from 1,000 to 10,000. Now we go from 10,000 to 100,000. So if fair value is 100,000 and we're trading at 26, it's a pretty rapid increase to fair value, I think, as investors buy things that are below fair value. But then what happens in the fall, post-halving, you get this parabolic blow off top. And in the previous cycle, fair value was around 30K. We got all the way to 69.
Right.
That was because there was too much leverage and too much gambling and speculating. I don't think we go 2x this time or 2.5x this time. Could we get 1.5x? Sure. That gives about 150K, something like that.